The driver, so GPS officer.
She finds them for you.
Yeah.
Hi, Kay, how are you? I'm good. And Kirsty, you may not remember me.
Rudy's daughter. Yeah. Okay. This is your own person. Good evening, everyone. Dr. Rivera, will you please lead us in prayer?
Yes, sir. Heavenly Father, we thank you for this beautiful day of life you've given us today, the blessings that you give us every day. And most of all, we thank you for the unconditional love you have for us. We ask you to bless us here today and continue to bless this institution, staff, instructors, and our taxpayers. And again, we pray for those that have lost loved ones to COVID. And we ask all this in Jesus Christ's name. Amen.
Amen.
The meeting of the Board of Trustees of Southwest Texas Junior College will please come to order. Dr. Rivera, will you please read the minutes of the November 18, 2021 board meeting, please, sir?
Yes, sir. The Board of Trustees of Southwest Texas Junior College met in regular session November 18, 2021, in the Master Student Center, Blue Bonnet Room. Board President Rodolfo R. Flores called the meeting to order at 7:04 p.m. Board members present were Rodolfo R. Flores, President, Dr. Harry O. Watkins, Vice President, Dr. Antonio H. Rivera, Secretary, Mariana Lara, Victor Lopez, and Tony T. Moreno. Board members absent was Anita Shackelford. Also present was Dr. Hector Gonzalez, President of the college. The minutes of the October 21st, 2021 regular board meeting were read and approved as presented by Dr. Antonio Rivera. Board President Flores welcomed guests at the meeting, which included college personnel, Jared Sandoval, Margot Mata, Wade Carpenter, and Rael Martinez. Also, Melissa Petersville from the Uvalde Little News. Audit papers were none. Present report presented by Dr. Hector Gonzalez. A motion was made by Victor Lopez and second by Dr. Harry O. Watkins to approve the October 31st, 2021 financial statement as presented by Dr. Hector Gonzalez. Motion carried unanimously. A copy is attached. Motion was made by Victor Lopez and second by Dr. Harry O. Watkins, allocating votes for Uvalde County Official District 216 for Tony T. Moreno. Motion carried unanimously. A copy is attached. A motion was made by Dr. Harold Watkins, second by Tony T. Moreno, allocating votes for Real County Official District 205 for Rupert Sparks, third, and 204 for Natalie Hampton. Motion carried unanimously, and a copy is attached. Motion was made by Victor Lopez and second by Dr. Harry O. Watkins, allocating votes for Uvalde County Official District 175 for Jesse Gonzalez and 175 for Cruz Mata. Motion carried unanimously, and a copy is attached. Board President Flores called the board into executive session at 7:19 p.m. to consider A, employees, resigned, retired, new hires, and transfers under the Texas Government Code 551.074. At 7:47 p.m., the board, the board reconvened in regular session. With no further business or action items to discuss, Dr. Harold Watkins made a motion to adjourn. Marina Nanada seconded the motion, and the motion carried at 7:48 p.m.
Are there any corrections or additions to the minutes? If not, it's done approved as read. We don't have any. Next item is our guest. We're glad to have with us our guest Ismael Martinez, Eric Eid, and Kevin Eid, and Ann Parsky, Derek Sandoval, Margot Mata, Melissa Petersfield, and my granddaughter Monica Flores. Thank you for being with us. Do we have any audience to patrons? Do you want to do the service spin or the financial audit before that? Okay. Next item, we'll have the service bins. So, where do you want us to, how many years? 15 years. And 15 years. Okay. If Ms. Lara and Victor Lopez will stand here at the front.
It long, huh?
Yeah, you've been here a while. You've been here a while.
Oh, my goodness.
Thanks, Vlad.
Okay. You step over here, I guess. So.
Should I get out of the way?
Want to be in the picture?
Okay. See what we have here. We have people.
I know, I do.
It's a pleasure for me to give out this pins to these two young persons. First of all, it's my pleasure, Maria, to present you with a 15-year pin from Southwest Texas Junior College.
Oh,
Congratulations.
wow.
And this other young fellow here, Victor Lopez, my pleasure, 15 years.
sir.
It's always a pleasure. Okay, thank you.
One, two, three. Take a couple more. Perfect.
I'm thinking front page.
So we got another young fellow coming.
We have another service pin. It's by distinct honor to present a 45-year service pin that was actually earned last year. So 45 years of dedicated service to Southwest Texas Junior College.
Wow.
All right. All right, here we go. 1, 2, 3. I know I'm not getting one of those.
Jason, Harry Lawrence.
Continue for a little bit more, hopefully. Thank you. Next item, we have audit financial statements. We have 2 for 1 now.
Yeah. Ms. Parky decided to let me have her spot, so. Doesn't think I can talk loud enough. Should have a copy of the audit in front of you, if you will, turn to page 6 and 7. This is our audit opinion. Received an unmodified opinion again this year. This is the best opinion you can receive. That, in our opinion, the financial statements are presented fairly in conformity with generally accepted accounting principles as of the end of your year, August 31st, 2021. Again, this is the best opinion you can receive. Starting on page 8 is the management discussion and analysis. This is required by generally accepted accounting principles. However, it is the presentation of management. It is not part of the audit. We do not, these are unaudited statements. It's a place for management to be able to give you an overview of what the accomplishments were for the district, the college in the past year, what your plans are for the future. Again, it's the same information in the body of the financial statements, but a lot of it is in a graphical and narrative format. As you flip through here, you'll see there's lots of pie charts of revenues, expenditures, various different information that's presented in a graphical and narrative format. Again, but it's not part of the audit itself. Starting on page 22 is the body of the financial statements. This is the statement of net position. We have the current year, 2021, and then a comparison 2020. Top part of our page is assets. Bottom is middle is your liabilities, and the bottom is your net position. Current assets. The top of the page, we had total current assets at the end of the year of $22,971,000 as opposed to $12,186,000 in the prior year. You can see the largest part of that was cash. Your cash went up from almost $6 million last year to $16.6 million this year. Part of that was because of some of the COVID money you received, plus the Mackenzie Scott Foundation gift. Total again, 22 million as opposed to 12 million in the prior year. Non-current assets were 46 million this year as opposed to 44 million in the prior year. So our total assets were 69 million as opposed to 56 million in the prior year. The deferred outflows for resource, this is the dreaded pension and other post-employment benefits that we have to account for. These are things that are out of your control, but we're required to report those here. Your deferred inflow for pensions is $3 million. Your deferred outflow for post-employment health insurance benefits is $6.4 million. Liabilities, the top part of the liabilities is your current liabilities. Those are due within a year. We had current liabilities at the end of the year of 9.3 million as opposed to 10 million in the prior year. Our non-current liabilities are our bonds payable, our notes payable, and then again, that pension liability and other post-employment benefit liabilities, which again, those are numbers that come from your teacher retirement system, and then also ERS, which we're required to drop into your financial statements. Those non-current liabilities are 53 million as opposed to 56 million in the prior year. One thing I always like to point out to people is to educate them is if you look at what it's going to cost to pay for pensions for all your retirees is $9 million. However, what it's going to cost to pay for the health insurance on those employees is $25 million. That shows, for you guys that are doctors or in the health field, you deal with this all the time, but it's very expensive to pay for that health insurance for your retirees. Then we have our deferred inflows of resources for the pension and other post-employment benefits. Those were $9.3 million. When we subtract our liabilities and our deferred inflows from our assets and deferred outflows, we have net position at the end of the year of $6,364,748 as opposed to a negative net position, which was basically because of the pension liability and the other post-employment liability. We were sitting with a negative net assets last year of $7 million. So there's a pretty good swing there, and it's finally positive. I was talking with Ms. Armis this afternoon, and when this pension liability first was dropped on us, we didn't think you would ever have a net pension positive amount again. So this is a pretty good milestone that you've got this far. So the next page is 23 is the foundation, which we're required to put in here because of its a component unit, but we're going to go over the foundation separately, so we'll skip that. We'll turn to page 24. This is your statement of revenues, expenditures, and changes in net position. Again, following the same format, we have 2021 and 2020 there for comparison. Our operating revenues this year were $20,281,000 as opposed to $10 million in the prior year. Our operating expenses were $50 million as opposed to $42 million in the prior year. So we had a net operating loss of $29 million as opposed to $32 million. Again, for those, I'm going to go over this again. The way the state requires us to present this, we can't put any of our state money in there. They consider that non-operational. So it makes it look really bad that you're losing money from operations, even though it's not, because we can't put those state monies in. When we bring your net operating revenues in, we had $43 million as opposed to $32 million in the prior year. So our true increase in net position for the year was $13.5 million, as opposed to we only increased our net position $852,000 in the prior year. So as a result, when we add that to our beginning net position, we have a positive net position at the end of the year of $6.3 million. A lot of that $13.5 million was the $5 million that came in from the Mackenzie Scott Foundation. However, you did receive a lot of COVID money that was able to be used, and it's kind of hidden in some of these financial statements, but you were able to pay off a lot of old student debt that was owed to the college with those monies. So it's able to increase those were monies that were directly affected the district's, the college's bottom line. A lot of the expenditures that you made were for plexiglass and PPE and things like that don't really affect your bottom line because it was money in and money out. But in this case, there was a lot of that money that was eligible to be able to reduce student debt. So it helped the college quite a bit. Page 25, this is again a foundation schedule, which we'll skip for right now. Page 26, this is your statement of cash flow. It shows where your cash came from and where it went. Our cash increased by $10 million this year. 26 million of that was used in operating activities. 43 million was increase in cash by non-financing activities, basically your state revenues, ad valorem taxes, et cetera. And then we used $6.2 million of our cash to basically purchase capital assets and pay off debt. So you can see that we had $3.2 million worth of capital assets in the year, and we paid off $2 million worth of principal payments and $700,000 worth of interest in the year. Our investments, we basically broke even on those. We didn't have any increase or decrease in investments very much. But at the end of the year, our cash has increased from what it was at the beginning of the year by $10 million. Again, directly related to the gift and the COVID money. On page 28 is the notes to the financial statements. These are the notes that are required by generally accepted accounting principles. Every year, these notes get a little bit thicker. I think we've got a total count on our audit report this year of about 100 pages. So, every year something is added to that. I won't go over that very much, but I would like to turn to page 38. This is a schedule of your long-term liabilities. Especially the first four items there, the bottom two, the pension liability and other post-employment benefits, we can't do anything about. However, you can see that we didn't add anything to our debt this year. We did have the reduction in debt of about $2 million this year. And then on the next page, on page 39, shows what we're going to have to pay for the next 3 years and then in 5-year increments thereafter. So we're gradually knocking down those bond proceeds, bond payments quite a bit. Like I said, the rest of these notes are basically dealing with the pension liability and the other post-employment benefits, which we'll skip for now unless you want to go sleep. So if you will turn to page 72, now we're going to break down our operating revenue into a little bit more detail. Before we saw it pretty much in total. Now we're breaking it down. We have, again, the totals on the right-hand side for 2021 and then 2020. So you can see our tuition basically stayed about the same. We had $14 million worth of tuition last year. This year, as opposed to 14.7 in the prior year. Our fees were 5.9 million this year, as opposed to 6.3 million in the prior year. Where we have a differences in our scholarships and allowances, we had 9 million worth of scholarships and allowances in the prior year versus 16 million this year. So that resulted in our net tuition and fees going up tremendously from 4.4 million to 11.1 million this year. Our additional operating revenues, we had 7.6 million this year as opposed to 5.5 million in the prior year. And then our auxiliary, our bookstore and dorms, we had 1.5 million as opposed to 663,000 in the prior year. So our total operating revenue went up about $10 million from 10.6 million to 20.2 million in this year. Then our operating expenditures are on the next page. Follows the same format. We have the total for 2021 and then the comparison on the right-hand side for 2020. Our unrestricted educational activities this year were 26 million as opposed to 28 million in the prior year. Our restricted educational activities, 21 million as opposed to 11 million in the prior year. A part of that was our scholarships. If your scholarship income goes up, your scholarship expenses go up also. So that's why that's increased there.
Can I add something?
Yes.
So if you look on this page, 73, if you look at the unrestricted educational activities for the year, we had 26 million. For last year, we had 28.4. That, a lot of that is the savings that we were able to, when COVID hit, and we had like 30 positions that were vacant and we kept vacant. A lot of that went to those savings there. So when we look at the COVID monies that we were able to recoup as lost revenue, a lot of that went straight to our bottom line because we were able to cut back on some of the expenses and not cover those expenses. And then if you look down at the next section, the restricted, if you look at that the fifth line, that $6.3 million, the bulk of that is the COVID expenditures that the capital expenditures that were funded by the COVID money, the plexiglass, the PPE, all those kind of expenditures that went up by, $5 million. And that's where that came from. Same thing with the scholarships. We had, if you recall, about $6 million in CARES money that went directly to the students. So you see that it went up from 5.3 to 10. That's where that money shows up as well.
And I believe, wasn't there about $1 million worth of blackboard type, what was the?
Yes.
Smart boards that was spent. Yeah, so that was a big part of that CARES expenditure was that. Okay, if you will turn to page 74, now we'll look at our non-operating revenues and our state appropriations. The state basically paid us about as much as they did last year. We had 10.5 million as opposed to 10.6 in the prior year. Our non-operating revenues were 44 million as opposed to 33 million. And if you'll look at that third line, that's where your $5 million McKinsey Scott amount is. You can see that that's pretty much spot on what we had there. There's a little bit more gifts this year, but not more than that. The interest on our debt was 1,102,000 as opposed to 991,000 for the prior year. So our total non-operating revenues were 43 million as opposed to 32 million in the prior year. If you will turn to page 76, this is your schedule of federal awards. This is the federal money that come in. One thing I do want to point out is you'll look down there towards the middle of the page. You received this year $8.7 million in CARE institutional money. That was the money that was used to pay for the smart boards but a good portion of that was spent to, and do you have a number on how much of that was used for a reduction in student loans? Do you know?
Right at $400,000.
$400,000. So see, there was people that owed you money that couldn't make those payments. Now the CARES money paid for that. So that was $400,000 that went to your bottom line. Another thing that's really eye-opening is that $5 million in student aid. That was $5 million that went directly to your students. I can't remember how much it was last year, but it was not near that. I think it was about $1 million last year. But this is money in addition to Pell. I think it went to every student, if I'm not.
Every student who
Applied, yeah. Last year that money was basically just for people who were eligible for financial aid, but this year everyone who applied for it got that money. So a lot of federal money flowing in this past year to help. If you'll notice, there's a total of $26 million worth of total federal aid that came in to the college. Then on page 78 is our state awards. This is state money outside of your appropriations that came in from various different entities. We are required to report that also. Then because you receive over $750,000 worth of federal and state funds, we're required to do a single audit, which means that we have to do a little more work into your internal controls and your compliance. What this first opinion is your our opinion over your compliance and internal controls in conformity with general auditing standards. It's kind of an overall arching theme. And we are stating in this that there were no deficiencies in your internal control and there were no compliance issues that we were required to report. Again, that's one of the best opinions you can receive. Also in this opinion, if you'll turn to page 81 at the top of the page, we are also opining on the fact that you are in conformity with the Texas Public Investment Act. Then, because of the $750,000, over $750,000 worth of federal funds, we're required to go in and do additional compliance testing over your major programs. In this case, we used your student financial aid, your Pell programs, your SEOGs, and we have to go in and do compliance testing of your eligibility for the students. There's a whole list of things that we have to go through to make sure that you're complying with the student financial aid compliance requirements. And in this opinion, what we are stating is the fact that we did go do testing on those and there were no deficiencies in your internal control or compliance issues. Again, best you can receive. And then on page 84, this shows the schedule and finding question costs for those federal programs. In the middle of the page, it shows which major programs we tested. We tested your financial aid. We also did the testing of your CARES institutional aid. We were required to test your major programs for the state aid, which was the Texas Educational Opportunity Grant. And in all of those cases, there were no findings in question cost. Then starting on page 85 are the statistical supplements that are required by the coordinating board. These are all unaudited statements. These are basically compiled by the junior college staff. A lot of it is very good information, gives you comparisons and over some of it over a 10-year period. Did you want to talk about any of that, or was there any questions on that?
The only thing we compared item 6 here. I know the board always asks, what is our fund balance? And we went back to 2014. That was the last year that we had no GASB for the pension or for the health insurance. So we brought that fund balance as a 14 every year to 15, 16, 17, up through the current. And we'll keep this going forward. We've included it in the MD&A in the audit. So at any point we can refer back to the audit and see what the fund balance. But I know when you think of fund balance, the unrestricted sits at $15,747,320. If you're looking at it in terms prior to the introduction of net assets. Endowments, the 2.2, the restricted 2.1, and then the capital assets, which is net of the debt, 20 million. So that you see our fund balance grew by about $10 million. And like I said, 5 million of that was the McKinsey Scott. And the other 5 million was the lost revenue that we were able to recoup, at the same time being able to manage our expenditures during COVID and not let them get out of control. I don't know many other institutions that were able to do both. For a lot of institutions, what occurred is when the lost revenue came in, they were able just to get back to even.
Right.
But since we were able to manage our expenses, those flowed through. So it was a great year for the college.
Yep.
I never thought that during my lifetime we could catch up with a pension fund.
I didn't think so either.
It's amazing.
That's going through it pretty fast. Questions? Like I say, I think, Dr. Gonzalez hit it pretty spot on. The COVID money came in at the right time to be able to get you in a very, very good financial position now. So
the first round of CARES money, we weren't allowed to charge lost revenue.
Right.
So we started managing cost, and when we had vacancies, we would hold vacancies. I think at one point we had an excess of 30 positions that we didn't fill. And this is the benefit of not filling those positions.
We do a lot of audits of school districts, and school districts are receiving, tremendous amount of federal funding from the CARES Act too. So, and it's pretty liberal in what their requirements of what you can spend it on. So it's been a real benefit for most of any of you that are on school districts or know it's been a real benefit for them also. It's almost so scary, the amount of federal money that's flowing into all the different political subdivisions. I worry about my grandchildren. They're gonna have to pay it off, so.
I understand we're gonna have a new fellow besides Eric.
Yeah.
Eric's grandson's gonna be taking over his
Son,
son. That's what
I'm not that old.
Okay, don't rub it in. No, I know you're not. We're going back to have you. Any questions or comments? If not, we'll entertain a motion.
Go ahead.
All in favor, say aye.
Aye.
All opposed? Motion carries. Now, will you do the honors? Nita,
I'm sorry.
you have to do the honors now.
I do.
We gotta adjourn.
There's nothing. Okay. I move that we adjourn.
Is there a second?
I'll second.
We're adjourned. Now we go into the foundation meeting. Let me see. Thank you.
Thanks for reminding me.
Foundation meeting, the agenda. Okay. The meeting of the Southwest Texas Junior College Foundation, Inc. will please come to order. We're glad to have the same guests. Thank you again for being with us. And now, Dr. Rivera, will you please read the minutes of the December 10, 2020, please, sir?
Yes, sir. The Board of Directors of Southwest Texas Junior College Foundation Incorporated met in a meeting December 10, 2020 via Zoom. Board President Rosewell Flores called the meeting to order at 7:25 p.m. Board members present were Rosewell Flores President, Dr. Harold Watkins Vice President, Dr. Antonio Chua Secretary, Maylena Lara, Victor Lopez, Tony T. Moreno, and Ed Secretary. Also present was Dr. Hector Gonzalez, President of College. Board President Flores welcomed guests to the meeting, which included college personnel and guests on the regular meeting. The minutes of the December 11, 2019 Foundation meeting were read and approved as presented by Dr. Antonio Chua, Secretary. The motion was made by Dr. Harold Watkins and seconded by Anita Shepard to approve the 2019-2020 audited financial statement as presented by Sarah Deed of Deed and Company CPA. Motion carried unanimously and a copy is attached. With no further business, the executive will make a motion to adjourn. Dr. Harold Watkins second the motion, and the motion carried at 7:31 p.m.
Any questions or comments? Additions? If not, the minutes will stand approved as read. Next item is consider an act on the 2020-21 audited financial statement.
Should have a copy of a little bit smaller one this time. If you'll turn to page 2, this is our audit opinion. Again, you received an unmodified opinion for the foundation this year that in our opinion, the financial statements are presented fairly in conformity with general accepted accounting principles as of the end of your year, August 31st, 2021. Again, the best opinion you can receive. On page 3 is your comparative statement of financial position. We have our assets at the top part of the page, liabilities and net assets at the bottom of the page. We have the current year, and then on the right-hand side, the comparison to the prior year. Current assets at the end of the year were $605,000 as opposed to $508 in the prior year. Our short-term investments were a little bit higher and our cash was a little bit higher both than they were in the prior year. Our long-term investments were exactly the same, $400,000. Our property and equipment at cost was did not change. We did not have any additions to our fixed assets. I stand at $14 million. Our accumulated depreciation did go up because we had the depreciation for the year. We stand at $5.9 million worth of accumulated depreciation. So our net property and equipment is a little over $8 million as opposed to $8.3 million in the prior year. Total assets, $9 million as opposed to $9.2 in the prior year. Our liabilities and net assets, we had current liabilities at the end of the year of $333,000 as opposed to $328,000 in the prior year. Our notes payable went down considerably. Our total notes payable at the end of the year are $476,000 as opposed to $675,000 at the end of last year. So our total liabilities are down from a little over $1 million last year to $809,000 this year. So when we subtract our liabilities from our assets, we have net assets at the end of the year of $8,247,693 as opposed to $8,252,000 in the prior year. If you'll turn the page, we have the comparison statement of activities. Top part of our page is revenues, bottom is expenditures. Again, we have the 2021 and then 20 for comparison purposes. See, our total support and revenues were $323,000 as opposed to $259,000. The main difference there is our gain on our investments. Our investments went up about $70,000 as opposed to losing a little bit in the prior year. So that was a big difference in our changes in our revenues. Expenditures, $328,000 as opposed to $345,000 in the prior year. Our interest expense is going down because our principal amounts is going down. So our interest this year is $32,000 as opposed to $45,000 in the prior year. So our change in net assets, we had a decrease in net assets of $404,654 as opposed to a decrease in net assets last year of $86,000. So again, most of that was due to the investments doing better. Then on page 5 is our comparison cash flow statements. Again, this shows where your cash came from and where it went. We had $221,000 worth of cash that was provided by operating activities. We received $10,000 from the proceeds of short-term investments. We paid off debt of $193,000. So at the end of the year, our cash increased $38,000. On page 6 starts the notes of the financial statements. Again, these are the notes that are required by generally accepted accounting principles. I would turn your attention to page 8 of your long-term debt. We have at the end of the year $664,000 worth of debt for the foundation that is still outstanding. And then you can see the payments that are required in the next 4 years, and in 4 years those debts are going to be completely paid off. And I remember when they were just taken out. I mean, it's amazing that you've made those strides in reducing the debt on that. So again, there were no additions in fixed assets this year. On the next page, that shows your breakdown of your property and equipment. There were no additions, no deletions. The only thing that was changed was the accumulated depreciation. Pretty much it for the foundation. It's plugging right along, paying its debts.
Any questions or comments? If not, we'll entertain a motion. Okay. All in favor, say aye.
Aye.
All opposed? Motion carries.
I move to adjourn. He's having to wake me up.
All in favor? Say aye.
Bye.
All opposed? We're adjourned. Thank you again. Well, we're in pretty good shape. I guess we can go to a kickapoo.